Cool off which is happening. We were up 65 points and there is some pullback which is underway as we speak. 10,963. So there is about a 25 point pullback from the highs which is suddenly materialized. And we should actually look at the Bank Nifty as well. And I think that'll probably tell us the same story. Yeah, I mean, it's actually quite evident there. 27,291 is where we are on the Bank Nifty. The high was 27,364. So there is about a 70-75 point sell-off on the Bank Nifty, which is coming in as well at this point in time. So let me just quickly see if this is coming in from some specific pocket. I mean, actually nothing. There is no real big heavyweight which is added to, which is adding pressure on the downside. It's a bunch of things. I mean, in any case, it's just 20 points. And we've seen this 15-20 point fluctuation a couple of times. News at the bottom of the screen that a couple of banks, sources tell us, may exit the prompt corrective action plan soon. And these include Allahabad Bank, Bank of India and Bank of Maharashtra. And this is again a story which our colleague Sapna is getting to us. She did mention when we had her about 15 minutes back that as a result of the 40,000 crore additional PSU bank recap, some banks may be able to come out of the PCA framework. So they may be able to start lending again, etc. Stocks are reacting. So these are reacting a bit more, but the entire PSU bank space has been doing very, very well. Mehrabun Irani is with us, Managing Director and CEO at Genie Gems Consultants, and he's with us on the show. Mehrabun, thank you for your time. Good to have you here. So, you know, it's been quite a move from the 10,300 levels to where we are on the Nifty, Mehrabun. Would you remain very bullish even now?
I think, Prashant, a whole lot of things have changed over the last 2.5, 3 months. And if you try to single out one or two, I think the most important is the fact that the disparity between the US markets on the one side and the emerging markets on the other has narrowed tremendously. I think we are also talking of oil coming down nearly 30-35% from its recent high. As a result of which rupee strengthening, trade deficit coming down, Iran sanctions problem behind us, US election problems behind us. Most important is also the fact that inflation has remained benign. And maybe 3 months ago we were talking, will there be a rate hike? Will there be a rate hike? And now a majority of people are expecting that there will be a rate cut coming soon. So in short, everything that has happened over the last 2-3 months have turned out to be very, very, very positive for India. And India has been a rank outperformer on a relative basis as well as on an absolute basis with other emerging markets over the last 2-3 months, which in turn have been outperformers to the US markets over the last 2-3 months. So that is the scenario right now. I think two important factors I think are a little worrying and people should be watching. One is the US Fed and the commentary. Will we have lesser rate hikes coming next year in US, number one, and number two is US-China. Let's not forget there's a 90 days notice period given, and Chinese Premier yesterday clearly said that we will do what we can in our own way, and they may not exactly end up doing exactly the way US wants it to do, because ultimately US is a very capitalist economy. So I think that is a turn of event which we'll need to keep on watching, and those are like swords hanging over our heads. But other than those, I think most factors are turned positive for India, and the biggest positive which I'm seeing on the screen today is that the market breadth. I think we have been complaining, you have been asking this question to others, that only few stocks are moving, but today the market breadth, nearly 8 or 7 or 9 out of 10 stocks are virtually in the green or in the black. And that is the biggest positive. I'm saying that the market wants to go up in the short term a little bit further, and you can't possibly run away from it. So I think positive factors, market breadth turning positive, and the accommodation policy which the RBI may adopt, which the market is perceiving right now, is another positive trigger for the market.
Mehrabun, what's your sense? 3 out of 11 banks might exit the PCA or prompt corrective action framework, Allahabad, Bank of India and Bank of Maharashtra. Are you confident enough? Do you think that this is the time to buy these stocks?
Well, I have been recommending PSU banks. I think in my last appearance on your channel also, I have been stating that PSU banks should be bought, and I'm sticking my neck out to say one more thing today. Of course, with a caveat that I may go wrong. But personally, I believe that PSU bank stocks, according to me, in 2018 would have it possibly made the multi-year lows. I think if you look at credit growth, it has picked up. It was around 7, 8, 9% last year. It's nearly 10, 12, 13% right now. Balance sheets have improved, and this, allow me to say, is that lovely, deadly combination. On the other hand, you also have bond yields coming down, inflation remaining benign, and some sort of write-offs which had happened are getting recovered, which should possibly add to the capital of some of the banks, which are always otherwise thirsty and hungry for capital. So all this positives makes a lovely, lovely cocktail. And I personally believe that 6 months later, 9 months later, I think the sum of the stocks could be 30% higher, 40% higher also. And I promise you more and more voices will start recommending the stocks, because the other big positive is most of the PSU bank stocks remain highly under-owned. I think you ask 10 out of 10 HNI investors, all 10 will say we don't own any PSU bank stocks. So there are a whole lot of combinations, whole lot of positives for PSU banks. And I somewhere feel that we could have possibly made a multi-year lows for some of these PSU bank stocks. Of course, I can go wrong on this, but as of now, I think all factors have turned positive for that.
Okay, welcome back. So the markets lost some steam. The Nifty is up about 50 points, about 25 off the highs. Ashwini, so the a bit of pullback finally materializing?
See, these sort of zones need to be often crossed with a gap or very high momentum. Somewhere, today momentum is petering out as it goes higher. So maybe some consolidation, making of a higher low, etc. Because, 600 points higher, the risk reward is often not very useful. We need to see whether now we are going to hold 10, 750, 800, and then maybe fresh buying should come in. But my guess would be that the mid caps could continue with their rallies while large caps kind of take a back seat.
Any stocks you don't want to highlight? Anything fresh? Any trade?
Basically, all sorts of stocks which fell because of this cost of capital going up, like something like NBCC, Kolte Patil, these kind of stocks which are making fairly strong bottoms right now as we speak. That is where, the shorts, etc. have already done their business, and now fresh buying is coming. Don't try to chase things which have been up for 7, 8 sessions. Basically, the NBFC space where lots of shorts are hiding, and the metals which have come off fairly sharply. I think this is where the short covering should happen. Maybe a few infrastructure stocks like IRB or Siemens, which is doing well, something like Ashok Leyland. So there are enough stocks which are still trying to emerge from the shadows.
Hitesh, what's your sense in terms of the next level that you'd watch on the Nifty?
See, I am looking at 11,050-70, and I think, as long as 10,920 is not being broken in the short term, maintain a long bias, despite the fact that we are slightly coming off the day's high, but I think that's okay. I think, after 2-3 days of rally, and we got a gap down yesterday, I think some profit booking might happen around the psychological 11,000 mark. But I think we'll cross it once. For the timing, I think it does look like that the rally is widespread. So therefore, I think the momentum could come from multiple sectors. Though I think PSU banking as a lot does, on a medium to short term basis charts, I think does look very strong.
Okay, there's 50 seconds to go for close. So we're going to wrap up things and then sort of get both Mitesh, Ashwini and Mehrabun for some comments. So, I mean, not at the day's high basically, but still a very, very respectable close. 50 points higher on the Nifty is where we'd finally close. And on the Bank Nifty, we'll be basically higher by about 1/3%. On the Bank Nifty, I mean, actually the pullback was of a larger magnitude, 27,275 on the Bank Nifty. The mid-cap and the small-cap indices have done pretty well. So 1.25% on the mid-cap index. Again, off the highs by just a little bit. And we look at the small cap index as well. I mean, the small cap index actually, by the way, closes almost at the day high, 1.25% higher. The breadth is what Mehrabun was pointing to earlier, and I think the breadth actually is 2:1 clearly in favor of advances. That's the closing bell. 52 higher, and we'll get a sort of last 30-minute adjusted closing in just a bit. The big stocks in the Nifty first, and we'll get to mid-cap, small caps, etc. in a bit. Indiabulls Housing, top of the list, Nifty stock, 8% higher, 837. Bajaj Finserv, 4% up, 6397. Axis Bank 3.25% higher, 640 rupees. Asian Paints ends up about 3.25%. Bharati Infratel ends about 3% higher. Bajaj Finance up about 2.33%. State Bank of India 2.33% higher. Ultratech 2%, BPCL 2%, and so on and so forth. A lot of financial stocks. I mean, if there is one pack which did the best, it has to be financials, NBFCs, PSU banks in particular. On the losing side, HCL Tech, Sun Pharma, Infosys. I mean, so for the second straight day running, technology does pretty poorly. I mean, actually IT was the only sector yesterday which was in the red, and I suspect today would be a similar kind of situation, sectorally speaking even. IndusInd Bank down 1.5%, Kotak Bank down 1%, Dr. Reddy's down about 1%. But as I said, breadth is pretty good, and 50 points on the Nifty. Mid-caps, Ekta.
Yes, absolutely stellar rally coming in for the mid-caps. In fact, it was a head and shoulders outperformance for the mid-cap index as compared to the Nifty as well as the Bank Nifty. So the mid-cap index was up 1.3%, strong advance decline ratio which sustained through the trading session. Small cap index was up around 1% as well, and the Nifty Junior rallied the most with a gain of around 1.5%. So that sums up what exactly took place in terms of the broader markets. In terms of stocks, it was a lot of the PSU banking stocks. In fact, the Nifty PSU Bank index itself outperformed with a gain of over 2%, almost 3%. So Bank of Maharashtra up around 9%, Bank of India up 6.5%, UCO, Central Bank of India, all of these stocks rallied in hopes that maybe there could be some relaxation on the BCA norms, plus maybe the OMO injection and PSU Bank recapitalization. A couple of other stocks which stood out was something like a Quick Heal. So that stock was up around 8%. And coming back to financials, in fact, important to point out stocks such as DHFL. So that stock was up 6%. Edelweiss was up around 4.6%. So overall, it was financials which really led the rally. But there were other gainers such as NBCC also, which is up around 10%. Reliance Communication, one of the top losers on the Nifty from the broader markets, so down 9.5% for that stock. HDFC Standard Life saw some amount of profit booking, so that stock was down around 1.3%. Biocon, negative news, recovered from the day's low, or rather positive news for Biocon. There was a reduce, from a brokerage, but nonetheless there was positive news as well. So that stock down around 0.7%, and something like Cadilla, which lost out in today's trade as well. But overall, outperformance coming in for the mid caps. Mehrubun, if you had to say go into 2019 picking a couple of pharmaceutical stocks such as Biocon, which has already outperformed year to date, do you think that those kind of gains would sustain or valuations would start weighing?
I think the last 4 years I have been very consistently negative on pharmaceutical companies, all of them, all Indian pharma companies, and the only two which I liked are Merck and Abbott. Merck is now a part of the P&G group, Procter & Gamble group. The point is, should one buy into pharma? I think, according to me, it's a wastage of time. And I have been stating this for the last 4 years, and I think it's been a capital loss for most investors in this particular sector, in the stocks. Is there a trading opportunity here? And the answer is possibly yes. So traders may do what they want, but as a fundamental investment story, even at the present valuations, after being negative for 4 years, I don't think I'm ready to change my view on that.
Okay. All right, Mehrubun, Mitesh, as well as Ashwini, thanks very much for joining in and taking us through today's Wednesday close of trade, which has been extremely strong. Let's get to a mega CNBC TV 18 exclusive then. Latha Venkatesh got up with Rajnish Kumar, Chairman of State Bank of India, and spoke on a whole host of topics, including the NBFC crisis, NPA problem, and the bank's loan growth outlook for 2019. Listen in, and we'll be back after a break.
The growth is coming more from the retail, which is steady for the last couple of years, and there is a demand particularly from the government entities. Okay. We are seeing a huge demand from those entities. They are large ticket loans, and SBI,
so
because
PSU entities,
all AAAs or highly rated PSUs. So it means that the government investment has picked up a lot. As far as the infrastructure,
so CapEx has started.
CapEx driven by the government, and this is normally what happens. That first the CapEx cycle has to start with the government spending, and then later on the
is this
private
roads
sector
and
spending.
Infrastructure types, or
yes,
is it
yes. All.
Say oil,
no, everything.
ONGC
everything.
Okay.
Oil and gas, roads, power finance.
Okay.
railway finance.
Okay.
So these are all either infrastructure or related. And in last 4 or 5 months, we have extended quite a lot to these.
That's very good to hear.
Yeah,
because actually we have only heard much of private capex. It's very good
but
to
private capex is still lagging, but it will follow.
Okay. Now I wanted to ask you about this NBFC's real estate piece. You know, the loans that you all are buying are more priority sector loans, I would assume.
Yes.
Are you worrying, I mean, this is more as an observer, that the large loans, builder loans given by, or LAP loans given by NBFCs and HFCs may still be a problem? Do you expect something to surface?
I don't foresee a big problem.
Okay.
And most of the loans NBFCs have been able to roll over. Even today there is a news item that now they have started again lending, getting back. So that way, like the situation which was prevailing about say 3 or 2 months back. So now the situation has improved considerably, and it all depends upon that any HFC or the NBFC, what is the quality of their portfolio with the builder.
Okay.
But we have to also keep in mind this fact that in the last 3 years, the offtake of the inventory as far as real estate is concerned was slow. So builders were holding on.
Yes. So now they may have to allow the prices to fall.
To some adjustment in the price and sell off quickly and then pay off their loans.
Okay. But do you think that maybe 1 or 2 small Amrapalis can happen?
Oh, it can always happen.
Okay.
We are a large economy.
So, yeah, of course.
Accidents happen. It will happen.
But do you think that the need for a special dispensation to NBFC is not there, considering the Reserve Bank has boosted OMOs considerably?
Right.
Now they're going to give like 2 lakh crore from December to March.
Right.
So you think
I think overall liquidity in the system will be all right. And then it is all about the credit quality of the NBFC themselves.
So it's not a liquidity issue, it's a
credit issue in any case, like nobody can do anything about
that. No matter how much money you throw at it.
If it is a bad credit, it is a bad credit.